Okay. Welcome back. Welcome back. Welcome back. As I was saying, this is the first of several family meetings that we're going to be doing. And the purpose of the family meeting is to talk about the things that most of our families did not talk about, right? We're going to talk about money. We're going to talk about how do we make money? What do we do when we make the money? How do we protect the money, right? We're going to talk about some investing. We're going to talk about some retirement stuff. We're going to cover a bunch of different topics, but we're not going to do it all today. But today, we're going to cover the basics. I'm going to give it more of an open forum. So if you guys have questions, jump in. Don't worry. I won't lose my spot. I know where I'm at. I know what I'm talking about. So I can jump right back into it. But this today is the one that's going to sort of set up the rest of them, right? So I'm going to talk about the things that you guys want to talk about, and then sprinkle on all the information that you need to make sure that you're following and doing things the right way, right? Because for a lot of us, sometimes we just don't know what the right questions are to ask. And I'm hoping that by the end of the series, which is going to be probably many months from now, you guys will have a great foundation and have a great resource, right? The Zoom is going to be recorded. It's going to be put up on YouTube so you can go back to it and reference it. There will be some available checklists. They're not for sale. I'm going to give them to you. As long as you guys are on the Zoom, you guys will get them. Just have to make sure you're in the email list, and then you'll get the checklist at the end. And I'm going to cover a couple of different topics, and I'll keep adding in people as we're going here. But I'll cover a couple of different topics, and we'll sort of keep going from there.
Use.
I thought someone had a question.
Okay.
Okay.
Oh, Bobby.
Yeah.
Okay.
Come here.
Who is that talking? Whoever's talking right now, could you please put yourself on mute, please? Thank you. Okay. Everybody can see my screen, right? I'm gonna need y'all to give me like a thumbs up
Yes.
or something.
Got you, sir.
Okay, thank you, Charles. Thank you. All right, so let's just jump right into it. Family meeting rules. The purpose of the family meeting is for this to be a safe space to learn, share, and empower one another around all things that involve financial literacy. That's what we're going to be talking about for the next couple of weeks, okay? If you are looking for some get-rich-quick plan, idea, scheme, or anything like that, this is not where you need to be. So goodbye. Don't stay here. I'm not telling y'all how to get rich quick. I'm not selling y'all credit. I'm not selling y'all business credit. I'm not selling you a shell corp. None of that stuff is happening here. We're going to talk about how do we learn the basics and then protect the money once we start making it, okay? Make sure you come to the meeting with a pen and a notepad, prepared to take notes, and feel free to ask questions at any point in time as I'm going through the slides, because you may have some questions, you may not. For some of you, this first one is kind of basic, so you might know all these things already, but please bear with me because I want to give everyone the same foundation so that as we build on it, we don't lose anyone along the way. All right? Don't be shy to ask any questions. There's always more to discuss and more to learn. So this is a safe place to ask financial questions, all right? The meeting's going to be about 60 minutes, so you can tell whoever you'd like. And share it with somebody. Share it with 3 people. Like, this is good information, and I'm hoping that you guys find it to be useful. Danielle, you have a question. What's up?
Are you sharing your screen?
Oh, you can't see it?
I mean, I can. I mean, I don't know if it's me or somebody else.
Oh, let's see. Maybe I'm not sharing. You know what? How about now?
Yes.
Now I
Yes.
can
Okay.
see it.
Thank you. Thank you for that. There you go. There you go. That's what we're here for. All right, perfect. Right. I said share this with people, share this with 3 other people, send the link out. Like I said, we're going to be doing this probably twice a month. So this is the first, the next one will be on November 5th. But the purpose of this is to get the information out there so that no one's getting scammed. There's a lot of scams going on in a couple different places, right? People are selling you courses on how to buy real estate with no money, how to buy and flip land. You're getting burnt with the business credit. You're getting burnt with the trucking. You're getting burnt with Airbnb. There's a lot of stuff going on, and you guys are people, not you guys, but people are losing a lot of money. So the purpose of this family meeting, is to sort of give everyone that foundation so that they are not losing their shirts anymore, right? That's the hope. That's the hope and dream for this thing for me, okay? Just a disclaimer, this is not financial advice. I'm not a CPA, I'm not a financial advisor. I'm giving this information out for educational purposes. It's for you to learn something and do something with it. For some reason, this Zoom is giving me a hard time with when people are trying to come in right now. So bear with me 1 second. Mhm. Okay. Not showing it to me. Mm. Okay, everybody's in. All right, cool. Okay. All right. Can you guys still see my screen?
Yes, sir.
Okay, perfect. Oops. That's not the view I wanted. And now why is it doing this? What do you guys see on the screen right now?
You have a slide and it looks like down the bottom, we could see all your other slides lined
All the
up.
other slides there? Okay, that's what I was trying to figure out. I'm not sure why it's doing this thing right now. Give me 1 second. Hmm, okay, try that one more time. What is the problem? I don't know why this thing's acting crazy to me right now. It's fine all day. Oh, okay, let's try it this way. All right. Let's try that one more time. Here we go. Slideshow. There we go. Okay. Screen's back up. And there we go. Okay. So I'm going to tell you guys a little bit about myself and then we're going to jump right into it, right? So who is Andre Talkscreen? I am an investor, a serial entrepreneur, a mentor, and an author, right? I started working in real estate back in 2005. Not to date myself, I am only 23 years old, okay? Nobody asked me any questions. So I've had every job in real estate except for about three of them, right? So I've done rentals, listings. I've been a listing agent, a buyer's agent, a mortgage loan officer, a loan underwriter, a commercial property manager, a residential property manager, an asset manager, and then I opened my own real estate brokerage back in 2011. And I've got a bunch of other jobs I've done in real estate, right? But since then, I still do real estate on the retail side, but I also am an investor, right? And while doing all of those things, I decided to open a insurance brokerage. So I'm the founder and owner of Seneca Village Insurance. The reason why I opened that brokerage is the same reason why I'm doing this series and starting this call today. I realized that working with my people in my community, we are not getting the proper information when it comes to financial literacy. I had families that were selling their homes in 2008, 9, and 10 that didn't necessarily have to sell their homes, but because no one gave them the fundamentals and the basics of how to keep their home through insurance, through the proper structure of their deeds and their trusts, they had to end up selling them. And you're selling your family legacy. You're selling the wealth that your parents and grandparents have built up over the past 60, 80, 90, 100 years. So that was what got me into insurance. And now we're licensed in 14 states and counting. We cover life insurance, business insurance, general liability, construction, restaurant, development, workers' comp, disability, all of it. We're a full service insurance brokerage, right? And on my journey of being a real estate investor and running my businesses, I've raised over $350,000 in business credit, right? So the reason why I'm not selling you business credit here is because I understand it, right? There's there's multiple ways to learn this information and put it out to the right people in the right hands without costing you lots and lots of money. So hopefully you're going to learn some of those tips and tricks, how to get your own business credit going, not necessarily having to pay thousands of dollars to get to learn it and get it done. Right. So I started investing personally for myself in 2017. I bought my first two rental properties out of state, and between 2017 and 2020, I built a seven-figure real estate portfolio from New York, investing in Delaware and Pennsylvania. Okay, so when I tell you that I understand how to invest in a more affordable market, because as you know, New York is very, very expensive, I've done it before, right? So I've found a new market, I've analyzed deals, I've went into contract, I got them done, I found tenants, I got them rented, I did property management, I've done all of those things and then hired people to do property management as well. So I have experience in all the areas of things that we're going to be talking about over the next couple of weeks. And I'm proud to say I put my first little baby book out. So not baby book, but my first book, right? That's my baby. It's called The Long Distance Millionaire. It's a step-by-step process of what I went through when I started my real estate journey, right? So it's everything you need from start to finish to find the market, to analyze the deals, to negotiate with the owners, to find contractors to do the work, to find handymen, to negotiate with them, to find tenants. Everything is in that book. And if you want, there's also an accompanying workbook that gives you all of the templates that I use to talk to tenants, right? So all of the letters, late letters, non-payment of rent, noise letters, leak letters, all of the violations that they can do. Everything is in a live document. So I can show you all that stuff at the end, but I just want to tell you who I am and where I come from. Okay. So what I need to know from you guys right now, I need you guys to put this in the chat for me. There are four little boxes here on the screen. I need you guys to tell me where you are on your current financial journey, okay? This is really important for me to make sure I'm tailoring and customizing this thing the best way possible. So jump into the chat. 1, 2, 3, or 4 should identify you. If you do not see yourself in 1, 2, 3, or 4, please put 5 in the chat because I need to know what I'm missing in regards to these little avatars, right? So number 1, you just became financially aware. You're just working any job and starting to make money. No plans for your money. You're just living life, right? And again, this is a judgment-free zone. I'm just trying to get an idea of where you are. So I'm giving you the right tools. Some of you may need a little bit more information than others. So that's what I want to do here in this beginning of the video. Number 2, you're in a career or a solopreneur, right? But you don't feel like you're getting ahead. You're not making enough money and you're not having enough money left over at the end of the month. No money really set aside yet for retirement. That might be a little bit far away from you, so you're not really thinking about that just yet. That's number 2. Number 3, money is flowing abundantly, but you have to work to maintain your lifestyle, which is many of us, right? But you're putting some money away for retirement. That's on your horizon. You're starting to think about what's your next step? Where do you go next? What does life look like in your golden years? Number 4, you're on the home stretch, right? Career is pretty much cemented. You've got about 10 years, between now and 10 years before you say, I'm completely done. F the job, I'm going to live on a beach somewhere. But you're not sure if you've put enough money aside to live the life that you want to live in retirement. You want to live comfortably, right? So One of those things should be you. If it's not you, please put a 5 in the chat because I need to know, right? And I appreciate everyone with all the feedback because it's going to be very helpful as we start to go along here. All right. So, what are the money lessons that we were taught at home? I would like actually I need you guys to unmute and talk to me a little bit here. What were some of the things that you guys were taught? Just give me your experience about what you learned growing up in whatever household you grew up in. What did you learn about money? And
Money
all you
doesn't
guys should be
grow
able to
on
unmute
trees.
yourself. Go ahead, Shelly.
Money doesn't grow on trees. Make sure you go to school, get good grades, get a good job, get a good education, get good grades, get a good job, and like you stay at that company for the till you
You
retire.
retire. Okay, okay. That's very true. That's very true. All right, who else?
I saw my father be an executive at a corporate job and also manage clubs on his downtime.
Okay,
And so I saw it as like, oh, I could do both and make a lot of money.
okay, okay. That's a very true statement. I'm great. I'm glad you experienced that at an early age. What else? What else we got?
I will say that oh, go ahead.
No, go ahead, Sarai.
I will say my grandmother did try to teach me about saving, but I will tell you that a lack of discipline did not allow that.
Okay, okay. Thank you, Soraya. Go ahead, Shane. What you got?
For me, I grew up in an immigrant household, so my parents were, very hardworking blue collar people. So entrepreneurship was something that was never encouraged. It was always go to school, go to college, get a job, work till you're 65, and that's pretty much what it is. So, savings didn't come into a conversation. I didn't learn it really till I became 23 when I got my first corporate job.
Okay,
And it wasn't a lesson well taught by my dad. He wanted to like take control over my finances and save money for me. And so rather than being a guide and a counselor, so it took me almost a decade really to understand like how to save, how to set up retirement, how to do all those things. So I felt like a late bloomer in the game.
okay, okay. Well, you're not alone. So trust me, you're not alone. But I thank you for sharing that as well. What else we got? Everybody has an experience for this story because you all are adults. So everyone's going to have their own view on what money is and what did you learn in the household growing up around it.
So my situation is a little different from most people. I was adopted. And so there was a huge generation gap in the people that raised me. I mean, a huge gap.
Mm-hmm.
And so uh, there really wasn't any conversations. There wasn't any encouragements or anything.
Mm-hmm.
But I did see them sort of have their own business.
Okay.
Even though they didn't share anything, didn't share any information, no tips, no pointers, no nothing.
Mm-hmm.
So I just basically saw what they did. And I guess at some point in my own life, I kind of wanted to do my own thing also.
Gotcha. Do you own your own business now?
Yeah, I'm like we had a discussion earlier.
I know.
So
That's for the
I've been
group. I know,
so
Charles.
yeah, so I've been in real yeah, so I've been in real estate at at least 20 plus years.
Right. So you kind of learned it through osmosis. Even just being in the environment kind of helped you also.
Yeah, yeah.
Absolutely. Beautiful, beautiful, beautiful. Anybody else wants to share? All right. I'm gonna
I'll
start
share a
calling.
little bit.
Okay,
Oh,
go ahead, Kay.
well, I was fortunate to have like parents that did tell the same story, go to school, get a good job, go to school, get good grades, get a good job. But I did see them both manage their own entrepreneurial like type of lifestyle. My
Mm-hmm.
dad was he was like an ad man at first, and then he opened his own creative production shop. And then my mom was a hairstylist. So my dad encouraged that for her to have her own. So I did see both
Both
parents
sides. Huh?
like develop their own passions, but they didn't have like they were kind of like self-taught in what they were doing.
Mm-hmm.
So I felt like they didn't have a lot of like really good like advice to give on like from
Okay.
a financial standpoint.
Okay.
Like the one thing that dad like kind of stressed to me was like get good life insurance. Like, like you just once you have good life insurance, you're solid. Like, but that's pretty much it. I didn't know anything else, but it wasn't that much of a factor. So that's my
Okay.
story.
Thank you for sharing. I got a couple questions for you guys. So Dwayne and Soraya, I'm going to ask both of you guys to unmute yourself. I want to know, you guys both put fives in the chat. Dwayne, you can go first if you're available. What's not covered in those 1, 2, 3, 4? Where you feel you're at right now?
Well, I just joined the live, to be honest with you. So, I thought putting the five was something that basically, you know, um, it was something that, you probably spoke about and, you just wanted a reaction. So I did just put a five. So if you want to
Gotcha,
explain it
gotcha.
to me,
Yeah, yeah,
I
no
would
problem.
love
No
to
problem.
talk more.
You can see my screen, right, Dwayne?
Yes, sir.
Okay, so 1, 2, 3, and 4. These are the four buckets that I set up for everyone. So if you're not in one of these four, you put a 5. So if you think you're in one of these, let me know. Read them through and let me know. And Soraya, go ahead. Can you share for me what your number 5 was?
I don't think you're sharing your screen.
Oh no, you can't see it?
Yeah, I don't see nothing.
Hold on one second. I think you're jumping on off and on with this thing, huh? All right, try it again. All right, how about now?
Yeah, I can see.
Okay, there we go. And Soraya, are you still on? Maybe not. All right. Oh, sorry about that. Just let me know when you have an answer, Dwayne. So what you guys just shared so far, I mean, I'm glad that some of you have a very similar story and some of you have different ones, right? But the reason why I asked that question is to sort of highlight the fact that a lot of us learn by watching, but we weren't really taught a formal way of how to manage and how to deal with money, even though in our household there was money being made and being spent all the time, right? So for a lot of us, like Shani, once we became adults, we sort of had to figure it out on our own. I was fortunate enough to grow up in a household where my dad's an accountant. So he talked about money more than most parents because he's always dealing with it. So he taught me early on about credit and what happens if you don't have good credit. He talked to me about saving and not being poor and homeless. He taught me about a lot of things. Most of it, it was a scare tactic, and a lot of it stuck, right? I remembered most of it, but we all get different lessons as we're taught and growing. So, oops. There's three ways that we pretty much learn about money, right? And you guys covered almost all of them on when you guys shared just now, right? What our parents tell us how to use money, right? So sounds like pay the important bills, cover your household, right? Pay rent, pay your mortgage, pay the light bill. For those of us that went to church, tithe 10%, save 10%. Buy things when you need them, right? That was some of the advice we just got out the gate. It wasn't really long term, it was just this is what you need to know right now. The second thing, the other way that people learned was by what we saw, right? So our parents showed us how to use money. They didn't tell us what to do, right? And some of us learned through osmosis, right? Like Charles did. So it looks like we're gonna do what we see our parents do. We watch them have a full-time job and also have a side hustle. We pick up some of those traits, right? We see them pay the bills, buy groceries. We're paying for education, private education. Some of us went to private school. They're buying cars, new, used. They may have told you how to buy them the right way. They may not have, right? But they're just living their life and doing their things. And then most of us saw them all spend crazy money on Black Friday and Christmas because that's just what we were taught to do, right? It's programming by all of the marketing companies. The third way is a school of hard knocks, right? We got told nothing. We just sort of went to work, made money, and sort of had to figure it out on our own. And that is the most expensive way to learn. Because if no one gives you any guidance, you're going to bump your head a few times before you start to figure it out. And for some of us, it takes years to recover from those things. My hope is that that no longer happens. The more we have these conversations, the more we teach ourselves through friends and family and then the kids, hopefully the kids never have to learn the hard way. And we're going to give all of them, that stepping stone to be better than the generation before them. Right? So we're going to do our best to not be young and dumb anymore, right? We're going to learn what we need to learn to do things the right way. So Here are the three levels that I believe we're all somewhere in this matrix, right? We're one of three levels, right? So today we're going to talk about level one for the most part, and I'm going to touch on a few other things that are not here, but I'm going to go over them as just at the end, right? So level one, you got to know about your personal credit. You got to know how to use it. You got to know what's in it. You got to know how to manipulate it. There are tips and tricks to have a higher credit score when you need to, and to not really worry about the credit when it's not an issue, right? Income, also in level one. We have to start making money, right? So for a lot of us, depending on where we're at in our journey, just starting out, college degree, no college degree, we have an executive job, we might be some C-suites, we might have a couple of side hustles on top of the regular job, we might be an entrepreneur. Where's your money coming from? Where's your income? Commission, non-commission. There's a bunch of different things that affect your income, because that directly affects the next thing, which is your budget, right? Budgeting is something that most people hate to do. And I get it. Nobody wants to look at the budget to see what they don't have. But I'm telling you right now, the day that you get a handle on your budget and you know where your money is going and what it's doing is the day that you start having more money in your pocket, and nothing has to change. You just need to get a handle on where it's going, because we got a lot of leakage in most of our lives, right? We put money in our pocket, it comes into our bank account, and we start buying stuff and spending stuff. And then the next thing you know, you can't remember what you spent $1,000 on. It's because we don't have a framework for it. Where was the money supposed to go versus where it went? So please, we're going to talk about budgeting because it's important, right? And it's okay to put all of the fun stuff you want to do, put in your budget. There's nothing wrong with that. Like if you want to do something, you want to go buy some things, you want to go on vacation, you want to do a trip that's outside of the normal budget, put it in there so you know where you're putting your money to, right? Budget doesn't mean boring. It just means you have a plan. Savings. Pay yourself first. That is the first thing that everyone should do when they get paid. I don't care how much money you get paid. You should always, the first bill you pay is you. Take the money out that you plan on saving, put it in your account. And I'm gonna tell everybody right now, you should have at least two accounts. You got one checking account that your money comes into. For most of us, we get direct deposit or something like that. Your money goes in there. You should have a separate savings account. You should not be saving your money in the same account that you're operating your daily and weekly stuff out of. It's not going to end well. You're going to spend the money because you see it in there. So you should have a separate savings account. And then on life one is level one is life essentials, right? We've got to cover the basics. We got to make sure we have someplace stable to live. We're comfortable. We're protected. We're safe. We've got lights on. We've got food in the fridge. We've got heat, right? Going into winter time. Those are the life essentials that we're going to be talking about, right? That's just level one. Once you've got level one covered, then we move on to level two. Now, what's in level two? We're going to look at insurance. Insurance is in level two because once you manage to cover your finance, to budget your finances, you know how much extra money you have, if any, right? And if you don't, now we can figure out how do we get to the point of having surplus. When you have surplus and you've saved up your emergency fund, you want to move that money out of that small savings account and put it into a place that's going to make you more money and be more beneficial to you. You're looking for interest. Think of your money like little soldiers. And when the little soldiers go out to fields, go out to work, they need to bring you back more money, right? They're like recruiters. So when you put your money into a bank, the goal is the bank's supposed to give you more money than you gave them. It's called interest. So the more interest you make, the more money you have, and that's when the wealth starts to build because you're making money without working for it, right? That's the insurance piece. Business credit. Once you've got your personal credit in place, we're going to talk about how do we build up our own business credit by having a LLC, having a corp. We're going to talk about the difference between S corp versus C corp, right? What do all of these things mean that everybody keeps talking about? Business credit is on level two. A money plan. Now, when I say a money plan, I'm talking about why are you working? Like what's the reason why you're working, right? No one works just for fun. And if anybody's working for fun, please let me know because I got some work for you to do. We all have a plan in mind. There's a reason why we're working for money because we want to go put it somewhere to do something else. You need to write that out. You need to map it out. How do you reach that goal? If it's just to go buy a car, we're going to make a goal for that. If it's to buy a house, we're going to make a goal for that. If it's to retire, we're going to make a goal for that. As you're starting to see, every single goal we have, we should have a plan for it. When you're in level 2, we're talking about investing, right? Investing is the key to the matrix. Once you understand the basics of investing, that any dollar amount makes a difference over a long period of time, once you understand that game, everything else is going to change. Okay. So we're going to touch on investing, where you can invest your money, what's a passive investment versus a non-passive, because Instagram and TikTok loves to sell people on become a passive investor. And they tend to push that on people with real estate. Real estate is not a passive investment. I'm going to tell you guys right now, it's not passive. So I've been doing it for a very long time, over 20-something years. It's not passive at all. You've got to understand that passive means you put the money in and you do nothing. I'm going to show you the areas of investing where you can actually do that. Money education. Money education covers things like APR and the cost of money and where you can, all of the lingo that the bankers use is what you need to understand in a conversation, because a lot of our community gets taken for a ride because we are not talking the same language. Money has its own language. We need to understand that language. So all of us should be bilingual. English is the first one, and money is the second one. You got to understand the language when you're talking about money. The next thing that we're going to talk about is level 3. So once you've got all of this stuff understood and you've got to level 2, that means the budget is taken care of, the home is taken care of, you've got a structure to what's happening with your money, you've got a money plan, you've got some insurance set up, you've got some access to business credit, because now you've got OPM, other people's money. Level 3 involves massive action. Massive action is where you get rich. You don't get rich in level 1 and level 2. You're gonna make some money, but you get rich in level 3. Okay, by using all of the pieces, now you take the puzzle, you put it all together. Now you got massive action, because now you have good credit, you've got access to capital, because that's a huge piece that most people leave out. They don't tell you how to get access to the capital, which we're going to cover on one of the series. You have to go put those things into place, right? You got to go start buying real estate. You got to start investing in the stock market. You got to start investing in the business. You got to start a business. There's lots of ways for you to put your money to work, as long as you understand how the money is going to move, right? Money management. If you're doing a lot with your money, you're going to need to manage what you're doing, right? Having your working in too many places is going to cause you to lose and destroy yourself, right? You're going to lose focus. You're going to miss things that you should have caught because you're doing too many things at one time. So you need to have a management plan for your money. And then you need to have an investment plan. Where are you safely storing your money? Is it insurance? Is it in the market? Is it in a brokerage account? Is it in a mutual account? There are lots of different places that you can put your money for it to safely work for you. You might not make 40, 50% on your money, but what's more important than making the money is keeping the money, right? So you have to safely manage your investments, right? Everything that you do, once you start taking all this action, is going to lead you down the path of management. And when you start managing your money, that's when you're making the money, because you're being diligent about what your money is doing. Now, I hope for all of you that you get to this part of level 3, tax planning. Tax planning only comes into place when you're making so much money and now you're tired of paying Uncle Sam, right? You need to figure out all of the things in the tax code, all of the tips and tricks to lower your taxable income, so that you're legally reducing it and not just avoiding taxes, right? Tax evasion is not a thing you want to get a phone call about. You don't want to go to jail for not paying taxes, right? And then once you've got the tax plan under wraps, we're going to talk about legacy protection and asset protection, because if you've done level 1, level 2, and the first part of level 3 properly, you have now accumulated a lot of assets. You've got real estate, you've got investments, you're in businesses, you've got partnerships, you've got a lot of things going on. And for those of you that are married, that's another layer of asset protection that you need to be aware of and mindful of, because your spouse is not in some of your businesses. So you need to make sure that if anything did happen to you, or you need to exit a business, they know the plan also. So asset protection falls under that. Legacy planning is what happens behind you? What are the kids getting? What are your grandkids getting? What are your grandkids getting? Like those are things you can set up, like the Rockefellers, which is a very hot word right now, infinite banking. One of the things that we're going to cover in one of the sessions is infinite banking. How do you set that up? How do you make it work for you? What's a trust mean? What's the right one for you? Revocable versus irrevocable. Lots of things to cover. I'm not going to kill you now, but there's a lot of pieces in here, right? So level 1, level 2, level 3 will show you what you need to be focusing on each level. And as you learn and master that new skill, when you practice it, you're gonna master it. And once you master it, you move on to the next piece. Okay? You guys have any questions for me so far? Nothing? Quiet?
No
Okay.
questions. It's very engaging.
Okay. Thank you very much. Let's go on to the next one. All right. So some of the basics, right? We're gonna talk about credit, right? That's in level 1. We're gonna cover a few things from level 1 tonight, and then I'm gonna open it up for a Q&A after we get through this part to talk about some of the other things I want everybody to share. So the basics of credit, right? What's everything that you should know about credit and what's in it, right? So what is FICO and what does it even mean, right? So FICO is Fair Isaac Corporation. That's what the word FICO actually means. Now, I need someone to answer this for me. When you see the word corporation, what does that mean to you? I need an answer. Talk to me.
I think of business.
You think of what?
I think of a business when I hear the word corporation.
Think of a business. That's absolutely right, Kai. So what's the purpose of a business? Don't go off mute. Yeah, I got some questions for you now. What's the purpose of a business?
I think the purpose of a business is for someone to operate legally, and to protect their assets.
What else are they supposed to be doing? There's a reason why they're in business. What are they trying to do?
Providing a service.
Serving the
Provide a
community.
service? Okay.
Make money.
Make money. That is the answer I'm looking for, right? No one goes into business for fun. It's not a charity, right? They're trying to make money. So the reason why I wanted to point that out to you guys is because this is the thing that most of us use to go and borrow money. This is the thing that they ask for, right? They're asking for your credit score on every single thing you do. When you get a car, when you're getting insurance, when you're getting a loan, they ask you what's your credit score. Now, if this corporation is in business to make money, how do they make money?
I provide them the service.
Who's their client? Who's their customer?
The consumer.
Which consumer?
Any consumer that's going to buy their product.
Well, who's buying their product? Are you buying? Do you pay for your credit score? No, you never pay for your credit score, right? So who's their customer?
Dump me on there. You got
Would it be the vendors?
Is it the businesses that pull it?
The vendors?
The banks, the
banks, right? The banks are their customer, right? So if they have the vendor is a bank, right? So the banks pay the FICO company, right? They pay them to get the score because they want to know, are you a safe person, safe borrower to lend money on? Now, is it in your best interest or the bank's best interest if you have bad credit?
It's the banks. That's how they could charge you more interest.
That's how they charge you more interest. So if this Fair Isaac is in business to service the banks, to tell them if you're a good borrower or not, do you think that they really care how accurate the information is on their credit report?
I think they do.
You think they do? Why do they care?
Because they go more off of your profile, not your credit score, right?
Well, it depends on who you're talking to. But what I'm saying is, if they're sending information that's incorrect to the banks and you are borrowing money and now you have to get a higher interest rate on a car loan, on a mortgage, you're going to pay more money. It only helps their customer, which is the bank. So the reason why I'm bringing that up is that the reason why the Consumer Bureau was created was because they were not doing the right thing. They were not reporting the right information. They were not updating the information properly. So if you did not miss a payment and they say you missed a payment, you got a problem. If you set your payment in properly and they misapplied it, you got a problem. The credit bureaus, before the CFB got around, they were the ones that were royally screwing people. And then they had to put an agency in place by the government to sort of keep them honest, because it's not in your best interest for them to do the very, very right thing. So one of the things everyone should be doing once a year is getting a free credit report. I'm gonna send out a link to everyone who's on the email list. I'll post it in the chat where you can get on the email list. I'm gonna send you a couple of links. One's gonna be where you get a free credit report from. It does not have a score on it because the score is not important. You need to go onto your credit report every single year to make sure that all the information that's on there is accurate. If it's not accurate, we're gonna talk about how do you get it cleaned up properly, because the more misinformation that's on here is the more it costs you in the long run, right? So what's the range of a credit score, right? Credit scores range from 300 to 850. That's the lowest you can have. That's the highest you can have. According to most of the banks, so I'll start with cards first. Card companies, for the most part, they don't really care what your credit score is. They will give a card to a dog for a loan, on a loan. They don't really care because they have something that they can come back and pick up a little bit later on, and they're charging you outrageous amounts of interest on a car loan. Banks care, but they care a little bit more than car companies do, than the car companies do. So when you're going to get your loan, if you want to be considered a prime borrower, you want to be above 720 in terms of your credit score. If your score is not that, you're going to get a little bit of a bump in your interest rate, right? So you want to have as high interest rate, as high a credit score as possible to get the lowest amount of interest if you're going to borrow money. Debt is another conversation for another day, but we're going to touch on it a little bit about what happens when you have too much debt, why they're trying to give you debt, and all of those good things that go along with the debt, right? But for right now, we're going to look at what makes up the credit score. So we're talking about the accuracy of your credit report. 35% of your credit report is your payment history. So they want to see, are you a good payer? Are you paying your bills on time every single month? That makes up a big chunk of your credit score, excuse me. 30% of your credit report, of your credit score, is the balance that you keep on open accounts. So if you got a $10,000 limit on one credit card, we're going to assume the person has one credit card. You got a $10,000 limit. If your balance is above $3,000 on a monthly cycle, you're going to take a hit on your credit score. So 30% is actually the magic number for your balance when you have your credit. You want to try and keep your balances, if you're going to have open credit every single month, open balances, you want to keep it under 30%. So for those of you who are fortunate enough to receive a bill every month and pay it off without accruing any interest, you are winning at the credit game. That's the purpose. That's what credit is made for. You spend the money, and by the time the bill comes, you have enough money to pay off the credit card bill. What a lot of us get caught up in is that we get ahead of ourselves on the spending and behind on the payments. Not behind that we're late, but we're spending more money than we have at the end of the month. So now we've got a problem where we're constantly playing catch up. That is a dangerous snowball to be in front of. You don't want to keep spending money that you don't have coming in. So we got to figure out, how do we adjust that? How do we get the debt paid off? How do we clean it up? Right? So 30% is 30% of your balance or below is where you want to be. 15% of your FICO is the length of your credit history. The longer it's open, the better it is for you. So if you got a credit card that you've had for 10 years, 4 years, 7 years, 20 years, no matter what happens, do not close the credit card. I don't care if you don't use it, cut the credit card up, because it affects your score very badly if you just go and close a credit card that's been open for a long, long period of time. It's just the way that the algorithm is set up and done. You don't want to close old trade lines, okay? So if you have the ability to keep them open, keep them open. Like I said, even if you don't use them, cut up the credit cards. A little asterisk to that. Some credit card companies will close your credit card on their own without telling you. And they'll do that if you had a credit card open for a long period of time and you don't use it at all, right? So each credit card company has a different length of time. Some are 6 months, some are 9 months, some are a couple years. If you don't use any activity on that card, they tend to close it because they feel like you don't need it. You don't want to be that person. So if you have a card that you've got a balance on, that a limit on, that you don't really use like that, every once in a while put something small on there because you want to keep the card active. All right, go ahead. What's your question?
Are there any credit cards that you think are credit cards that you should stay away from, or do you think that all credit is good credit?
Great question. So all credit is not good credit, and you should stay away from, well, it depends on where you're at on your journey, right? So there's level 1, level 2, level 3. If you're still in level 1 and you're sort of figuring it out and getting it together, you don't want to be paying for the credit. You don't want to pay for access to the credit. So they have some credit cards that are charging you an annual fee. You don't want to necessarily mess with those. If you have no credit at all, some people give you the advice of getting a secured credit card. I'm not a huge fan of secure credit cards, but they are a way to get the credit profile started and going, right? So if you cannot get any credit at all, get a secure credit card. But like I said, that's not the ideal place to start. So to answer your question, no, not all credit is good credit. You don't want to be paying for credit cards on an annual fee just to have access to credit. That's not a good thing. It's not a good place to start. As you mature with your credit history and your financial wherewithal, that may be perfectly fine because you're paying for some of the perks and benefits. You also want to stay away from super high interest rate credit cards. Now, most credit cards, depending on your credit score, will offer you 0% interest for a certain amount of time. Some of them are 6 months, 12 months, 18 months. The longest I've seen is 24 months. Those are good cards to use because you're not trying to pay the bank interest. So if you're gonna have to roll your balance every single month, you want to do it with a card that's charging you 0% interest. If you can find those based on your credit profile, and I'll find a list and send it to you guys. That's all, everybody that's on the email list. I'll send out a list of credit cards that offer the 0% interest. That's where you want to be. You want to find credit cards that have 0% interest if you're not going to be able to pay your balance in full every single month. Okay? Did that answer your question, Kai?
Yes, you did. Thank you.
Okay, perfect. All right. The next piece of the FICO is 10%. 10% is the type of credit that you have. So a part of your credit score is what type of credit. So as Kai just asked, all credit is not the same, right? So having a mortgage on your credit report holds different weight than having just a credit card. So you can have a mortgage, you can have a credit card, you can have a personal loan, you can have an installment loan, you can have a car loan, and then you can have bankruptcy, you can have a foreclosure, you can have collections, right? On your credit report, it's all forms of credit. Some of them are positive and some of them are negative. Depending on what's on your credit report affects your score as well. So the type of credit that's being reported to your credit report affects you. Just as a note, some people try to go and get personal loans to wipe out their credit card debt to consolidate it and pay it off. Now, if your sole purpose and goal when you're working your credit is just to clear off the debt and get it out the way, that's okay. If you're trying to go buy a home and secure new credit, the personal loans that show up on your credit report sometimes negatively affect you. They're not helpful when you're trying to get certain types of credit, like a loan from a lender for like a piece of real estate. Just to keep that as a little mental note. Another thing I want to say about you consolidating all of your credit card debt into a personal loan is that if you don't address the behavior, your habits about how you spend money, getting a personal loan will put you into more debt. And here's why. Let's just say you had $25,000 in credit card debt across 5 cards. You got a personal loan for $25,000 and you moved all of your balances to the personal loan. So now you have one loan with a payment every month of $1,000. If you do not have self-control, you're going to have this $1,000 personal loan payment And now you got 5 cards with $5,000 limits on them, and you start spending more money on the credit cards. So now you have way more than $25,000 in debt. You've now doubled your debt in some cases. You don't want to cover it up with a Band-Aid. Money is very, very personal. It's something that people spend money based on their feelings. I need you guys to be aware of that, because if you're not aware of your personal spending habits, you're never going to get out of debt. So be conscious of how you're spending money and what you're feeling when you're spending money, right? That's why I harp on having a budget so much, because when you have a budget, you sort of have a guide or a plan as to this is what I'm supposed to be doing. And then you get to see where you deviate. If you don't have a plan for it, you're all over the place. You spend the money that you don't have, and it's going to come back and bite you eventually. Last piece of your credit score is the number of inquiries. So 10% of your FICO score is based on the number of inquiries. Anything over 7 is deemed a lot by the credit companies, right? Anyone that lends you money. So when you get a bunch of inquiries on your credit report, they affect your score for about 24 months. So if you did a bunch of inquiries 2 years ago because you were buying a car or getting a house, those inquiries will show up and they might affect your score for about 2 years. After that point, they no longer affect your score, but they may stay on your credit report. If it's past 2 years, you can make a request to the credit bureaus in writing to remove the inquiries, because they're only supposed to be on there for 24 months. So if you got anything on your credit report that's past 24 months in terms of an inquiry, you can have it removed. It's not a big deal. They take it off pretty quickly once you send them a letter. A couple things to know when you're looking for credit. If you're going to look for a home or a car or anything where you tend to shop around for an interest rate, you want to do that clear. Let me be clear about this. If you're shopping for a car and you're going to have your credit pulled, you want to do all of that within like 3 days. Some people will tell you a week. I'm going to say 3 days. So if you know you're going to go buy a car and you go to the dealership, the first thing you want to ask them is their credit line, are they lending you the money themselves directly? Or are they going to shop it out to different banks? If they tell you they're going to shop it out to different banks, that one dealership can send your credit application to like 20 banks at one time. That will tank your score if you keep doing that at multiple places. So you got to find out from them, how are they going to pull your credit and how many times are they pulling your credit? So you have to ask them before you give them the information, and that information is your social. That's the piece that they need to run your credit. So before you give them your social, ask them, is it going to be a one-time pull? Are you guys shopping me around? What's the deal, so I know what I'm walking into? Okay? Same thing for mortgages. If you're going to one bank, like a big bank like a Chase or Wells Fargo or Citibank, they do things internally. They're going to pull it one time. If you go to a mortgage broker, a good mortgage broker can pull your credit one time and use it for multiple banks. Chase can only use it for Chase. Wells Fargo is only for Wells Fargo. A mortgage broker can use your credit report for multiple banks. So sometimes if you're not a super clean borrower, and when I say super clean, I'm talking about 720 FICO and up, you have no debt at all, you have very low DTI, you have a bunch of cash in the bank. If you're one of those clean, what they call vanilla borrowers, you can go directly to any of the big banks and get good rates. If that's not you, don't go to the big banks. Go to a broker. The broker is going to shop you around and put you at the best place possible based on your credit profile. Okay? Any questions about the credit score and what's in your FICO? Okay.
Quick
What
question.
about credit unions?
What's the question about them?
So instead of going to a mortgage broker, so put it like this, I'm building my credit, right?
Mm-hmm.
And I have a little steps as far as what I want to do starting out,
Mm-hmm.
which is like going to credit unions to kind of not to get a secure card, but make a relationship with them.
Okay.
So in order to build my credit up. So what I would do that over a period of time with the credit unions, or just go, because I don't have a score, so I can't go to a mortgage broker to even get a house. I have to build all that up. So
Okay.
how long would it actually take me, or what's the right path do I need to go in order to build up my credit score? That's my real question.
Gotcha. So here's a shortcut and a couple of tips on that. One, once if you do go to the credit union, they're a good, so local banks are good places to go when you're trying to build the credit, right? That's a great place to go, the credit unions. If you do not have any credit score at all, and you have anyone in your immediate circle that you know, if they add you as an authorized user on their credit card, now here's the trick to that. Make sure that person manages their credit properly. So that person should have a good credit score. It should have high limits and low balances. If you go and ask your boy who has high credit limits and then high balances, he might actually hurt you when you try to go get yourself added to that card. So an authorized user will give you instant credit because they're going to use the person's history as a part of your history, and it's going to generate a credit score for you. Now, if you're trying to buy a house, don't do that and go buy the house. You're gonna do that to go get other credit cards.
So let me ask you this: so instead of using that, because that's a trade line, right? So do you feel that instead of using a trade line, is another term that people use is called more again a primary,
Yeah, well, so
right?
you're a primary when you open the card. So if I added you to one of my cards, you're an authorized user. If you open a own credit card, you're the primary.
Got you.
Yeah. But if you're trying to get just to have a credit report with a score on there, getting
Yeah,
added as an authorized user is a shortcut way to do that. Because
get a trade line.
it'll instantly, yeah. Well, so paying for, when you say trade line, it sounds like someone told you could buy a trade line. Be careful with that.
Yeah, so yeah, you're right, right? So here's my step because I actually bought two trade lines, right?
Mhm.
To try to boost my score up.
Yep. Did it work?
So it could look like I have, some points on there or look like I have a credit score. So I could potentially, get a person get a personal credit card.
Yeah.
And not saying use that personal card to go spend, but to actually build up my credit,
Right. Did
right?
the
So
trade line work for you?
it's not working right now because I don't see any boosts because I don't have enough data on my credit score.
But you have the trade lines on there, no?
Yeah. So it has to kick in. My boy says it's going to kick in like 2-3 weeks, but I ain't see it yet. So I'm still like at that
Just
process.
did it. You did it like this week?
I got it like 2-3 weeks ago.
Okay. So once 1 month, like once you hit like a month, like a full cycle, you should see it.
Right. Okay.
We gotta wait a month for it to hit the credit report, to hit the bureau. So if it's a good trade line, it's gonna show up on your credit report 1 month after you do it because it needs time. It needs 30 days to cycle. The reason why I said be careful with the trade lines is that people will sell you trade lines and they're lying, right? So they're telling you because you're paying up front for the trade line. So you don't know if it works until a month after you gave them the money.
Mm-hmm.
And if they're not a reputable person, they're just out here scamming you. People are getting hurt. So two things happen with trade lines. One, they'll show up real quick for like a couple days and then they'll go away. Or two, the trade line just never shows up at all. So I mean, I don't know who you use, but I hope that person's gonna.
It's a reputable person.
Okay.
So the trade lines that I did purchase, they do have the age, they do have the limit, they do have the history, and they should at least stay on till at least 30 to 45 days.
Okay.
Um,
That's what they told you? For in terms of how long?
that yeah, that's typically, because I have people that use that went through him before.
Okay.
So I know it does work.
Mhm.
It's just like, like I said, I can't go off what people say. I got to
Right.
see for myself. So
100%. 100%. I believe that. I agree with
you
that.
know what I mean.
Yeah,
So I'm just
many times with trade lines, they have you pay for it, and then maybe a month or so later, you're gonna have to pay for it again. So it's
Mhm.
better off to go ahead and try and build up on your own because you don't have
Yeah.
to keep paying them just to have it sit there and
Right.
restart all over again.
right.
Yeah. So, like I said, it's a way to do it, but there's other ways to do it also. Just know all of your options, is what I'm saying to you.
All right. So quick point. Tell me what's the best way of going about it. I'm fresh as far as trying to build my credit.
Mhm.
What road should I be taking? Not saying the fastest route, right? Because I know it takes a while. What's the
Mhm.
most reasonable way of going about building my credit?
Well, what are you trying to do? What are you trying to get credit to do? Because credit's only important when you're trying to go borrow money to do something.
So basically, what I want to do is build my credit, use myself to get business funding,
Mhm.
so use myself as a PG, but I have to get to a certain point where my credit is set as like at least a 680, 700. Freeze that credit, go use myself, like I said, PG, get business funding, open up a business and checkers account. But first, and then I got to open up 2 LLCs. I want to get LLCs and everything like that, so I could actually have, some, not saying business history, because I know there's all type of things out there, like shelf corps and all that stuff. So my main thing is just get um, funding for my
For what?
businesses.
For what?
So I have a wholesale company I want to start,
Real estate?
and yeah, I'm a real estate agent.
Okay.
So I have a wholesale company I want to start. I need funding for that. Probably at least 300,000 or 400,000 starting off, because how the housing market going right now. Good properties, they're kind of high up. Um, also, I also may want to start a funding company as well.
Okay. Question for you. How long you been a real estate agent?
5 years.
5 years. Is there anybody in the chat right now that's a wholesaler? If you are, unmute yourself. I need to talk to you real quick. There's not one wholesaler in this chat, really?
I've done some wholesale deals. I just don't do it full time.
Okay. How long have you, how long ago did you do your first wholesale deal?
How long?
Yeah, how long ago was it that you did your first wholesale deal?
How long ago? This is my first one?
Yeah.
It's been about 10 years.
10 years. Did you use any money when you did it?
Just for consideration.
For the down payment, earnest money?
Yeah, earnest money, and it was little to nothing almost.
Okay. I've been wholesaling since 2007, right? And the reason why I'm bringing this up, Dwayne, is because I asked you what's the money for, right? You said you want to get business credit to start the wholesaling business. You don't need money for that, right? The premise of the wholesaling business is to find the deal and then move it to assign it to somebody else, right?
Right.
You don't necessarily need money to business credit to go do that. You can go do a deal without any business credit at all and get going right away. I just assigned a deal yesterday on Monday to a buyer, right? And even the down payment money I didn't put up. So I'm not saying don't do what you're gonna do, but I'm just saying if you're looking to get into wholesaling as an agent, you got access to way more information than most people. Because
No, correct. You're correct. I always could play the middleman part. I could always do that, right? But like I said before, if I'm want to do it for my business, yes, I don't need capital. I could, find somebody that's interested, like an investor, and find them a property and get money off of them. Yes, I could do it that way as well. But if I want to be the investor myself, and have something I can scale and grow capital, real capital, I believe. First off, you have to have the knowledge of what you're doing, which I do, and you have to have the people around you, the investors. I have over at least 40 to 50 investors in my database.
Yeah.
So I have the clientele there. So if I'm able to not only do wholesaling, but say in the mix of doing fix and flips as well, it's kind of like my poison. I can get to pick and choose of what I want to do.
100%, 100%.
I just feel like the capital would just help me with that, or boost what my plan of action would be.
Okay, and I 100% agree with you. And the reason why I like to be clear and challenge you on what you're talking about is because when you're clear about what you're saying, then you're clear as to how you're going to get there, right? What you just said right now is why you need capital. It's not to wholesaling, because wholesaling is always the middleman. You never need to have capital to wholesale. All you got to do is be able to find the deal. If you're going to fix and flip it now, yes, your credit's got to be intact. You got to have down payment money. And if you got a hard money guy, they're going to give you the construction money for the draw. But even with that, you still need to have reserves, because from experience, when
you don't know what's going to happen.
It's not even that. They're slow on the draw. So the longer it takes you to get the next draw, your contract to stop working. You always want to keep the momentum moving. So if you got the money in the tuck, you're going to give it to them to keep them going and get your draw back on the back end and keep the work going, right? So
that's it. That's to keep the right cash flow. Like keep it going. Cash
you want to
flow.
keep it moving. You want to keep it moving. So for fix and flip, you're going to need to build it up, but not to wholesale. So just be clear about what it is that you're looking to do, because you can get started tomorrow if you're just trying to wholesale. But I hope that answered your question.
Yes, sir.
All right. Any other questions about the FICO and the credit? Nope. Okay. Budgeting, right? Why does everyone hate budgeting? Please tell me why you guys, if you guys hate budgeting, it's okay to tell me you hate budgeting. Why do you guys hate budgeting? I'm looking for some answers here. Somebody talk to me.
Okay, well, I'm gonna say that it's not that I hate it. I always give the excuse of I got too many things to do.
Mm-hmm. Okay, it's
I
fair.
mean, you keep telling yourself the same story, then what are you gonna budget?
This is true. This is true. This is very true.
So again, lack of discipline. But I think that's probably that's why I can't say I don't like it, but that's why I don't do it.
But you don't do it. Okay, fair enough. Fair enough. Thank you for sharing that. Thank you very much. Anybody else wants to tell me why they hate budgeting?
Just in my situation, I was just never taught. I just never taught to budget.
Okay.
Even though I do handle money pretty well, I was just never taught to budget.
Okay, but you run a business.
Yeah. So
you
I
have to
do
do some type of
budget,
budgeting.
even though I wasn't taught it. I'm good with money.
Okay. Okay.
But not the proper way where people have a screen set up and everything is itemized, and in that sense of like invoices and things like that, I could do that and run a particular job. But for my own home, I've never sat down and did it. I know what I'm supposed to do. Yeah, I know what I'm supposed to do, and I just get it done. But being properly taught how to do it, I've never had that experience.
Okay. Okay. Listen, I'm not perfect with it either, right? But I'm aware of it. So no one's perfect. Like the budget is a pain, and sometimes you feel like doing it, sometimes you don't. But I promise you guys, if you start to do it, I get that we may not be where we want to be financially. The money might not be flowing in the way we want it to be. But if you start to budget, it's like putting on glasses, right? And you're in the eye doctor, and as you start to mess with the lenses, everything gets clear. When you start to budget, it clears up everything around your money and in your life. I can promise you that. And it doesn't matter how much money you make. It makes no difference. As long as you start to do it, you'll start to see that things start to pop up in your line of sight. Your reticular gets activated, and you start seeing things you didn't see before. So budgeting is a great tool to get you to where you want to be, right? So the most important part of a budget is not how much money you make, but it's how much money you keep. Okay. That is the reason why I tell everyone to do a budget. Because the first thing I said to you that you're supposed to do when you get income is what? Pay yourself. So if you pay yourself first, there is no reason that you don't want to see how much money you're paying yourself. Do the budget to see how much money you're setting aside for yourself. Everything else is secondary to you, right? For those of us that are church first, tithe and then pay yourself, because you have to have the money for yourself to give it to the church, right? You have to have the money for yourself to give it to the credit card company, to the car loan, to the mortgage. You got to know where your money is going first, and you should always pay you first, because if anything happens, ain't nobody coming to save you. You got to have the money for yourself somewhere, right? Steve, what's up?
What you got? What you got?
How you doing, brother?
Oh, amazing, amazing. No, great call so far. Great call. Just wanted to I have a timesheet that I wanted to drop to your group, if you don't mind.
No, go ahead.
And it's basically, I was hearing about the budgeting situation. A lot of things come down to the amount of time that people allocate to certain things. Right. And if it's not on a calendar, then it's not going to get done. So, at the academy, we had everyone do a time management sheet. So basically how many hours you sleep, commute to work, you name it, everything, social media, Netflix, you can even add categories. And once you start to add that stuff up on a daily basis, it'll calculate it in weekly. And then you'll start to see exactly where your time goes. So back to the budgeting situation, just to drop this on everybody, just think about it. If I was to ask everybody here, how many people know to the exact dollars and cents how much money they have in their bank accounts? And I have multiple accounts, personal and a bunch of businesses, right? So I could answer, I don't know, right? And most people can too. How many people know how much money they make per month down to the dollar and cents? Now, if you're on fixed income, that's pretty easy for people to come up with that number, right? But for guys like me and you, that'd be tough because every week is a different week.
Yep.
So most people don't know how much they bring in, right? But you'll get some on fixed income that know for certain. But most people don't know how much they have dollars and cents in their bank account at any given time. And then the last thing is, how much do you spend every month? And most people don't even have a spending budget,
Right.
basically, so they can't answer that.
Right.
So I say that to say that money is a fleeting mistress, right? So she will only pay attention to the people that pay attention to her. So a lot of times you might think that you don't want to look at that bank account, because I've been there when it's a little low and you're like scared to look at it. You got to get past that point, right? Because it's not going away and it's not a responsible way to look at things. It really just is scarcity mindset. Yeah, we weren't taught that, but we weren't taught a lot of things either. But we're here learning.
Absolutely.
So I would say this ain't even like a top of the year situation. It is just one of those things you just need to say, listen, every Sunday or every morning, I'm going to log into these bank accounts and just peek in.
Just take a look.
It's I'm telling you, because whether you have a lot of money, you're gonna have to mine it anyway. So when you're not minding your business right now, you start to run on the hamster wheel, and then you start to notice patterns. And when you don't mind your business, so I just wanted to drop that gem on you guys. I'm gonna drop an Excel spreadsheet right now. If you guys want to partake in it, great. If you don't, just grab it anyway. Trust me, it's profound. Most people, it's like social media. That's what's killing everybody's time. Coming from our
phone. Doom
yeah.
scroll.
Yep. And I work social media into my business, but I could tell you that not 100% of it does go to business.
Yeah.
But definitely more than most people who don't have any business at all, for sure.
Yeah. Thank you for sharing that. Go ahead, put it in the chat.
Amazing call, though.
Thank you. Thank you. Oh, skipped it. All right. So, yeah, your money and your time are the two things that you need to be most mindful of, right? Because if you don't track those things, if you don't have a plan, it's going to find its way out the door some way, somehow. So, right. So, there's different types of budgets, right? So for those of us who get paid monthly, you can do a monthly budget, you can do a bi-weekly budget, you can do a weekly budget. If you're on a commission-based kind of a job or a freelancer like per gig, you can do a budget that way also. No matter how the money's coming in, you got to record it and then figure out how you're going to spend your expenses, right? That's the income part of the budget. Saving is the number one thing I tell people to do with their budget, right? So the first thing that when that money comes in, you want to figure out what's the number you're going to pay yourself. That's what goes into your savings account. And then you sort of work your way back from there. You got to take care of the important stuff, the mortgage, the rent, the utilities, the food, and then everything else it's disposable money you're spending somewhere along the line, right? The car, if you got to get around, depending on where you live, that might be a necessity. If you're in the city, maybe not so much, right? Car insurance is through the roof. Everybody who drives knows how much they're paying for car insurance right now because it's so expensive. It makes Steve just nope, there you go. Yeah. So you gotta set up your budget properly, right? You're gonna have regular expenses that are gonna be on your budget every single month. Put those in there, and then for things that are not regular, you add them to the budget as a line item that you can always take off, right? So this thing's not set in stone for forever. It's a live document. You're gonna change it weekly, monthly, or every 6 months, whenever you're gonna do it. You can add things to it, you can take things off of it, but the purpose of this is to get you in the habit of looking at your money, seeing where it's going, excuse me, see how much you're spending, see how much you're keeping, right? Because you want to know that number, because the more that you're aware of it, the more you get to keep. Okay. And as your income starts to grow, you want to review your budget and adjust it. If you start, if you own your own business, or if you get a new job, you're gonna start making more money. The prudent, smart thing to do is not to necessarily change your expenses right away. You're making more money, you got more money to save, you got more money to invest, you got more money to accelerate that end goal, right? Because if you created a plan of why you're working, you know what you're working towards, right? No one works just to work. We're not here, we weren't created to just work, right? We're here to live a life. So what kind of life do you want to create for yourself, and how do you reach that goal, right? Budgets are not a bad thing. It's just a plan for the money, right? So if you don't have a plan for it, you will lose it. I don't want to harp on budgets too much, but please, people, start actively looking at your budget, right? Savings, right? How much should I save and where to save it? So rule of thumb is supposed to be 10%. right? Depending on your bills, you may be able at 10, you may be at 10%, you may be under 10%. No matter what that number is, do that thing first. Pay yourself first when you get your money coming in the door, right? And at minimum, if you're starting to save money and you're not drowning already in debt, you want to set up an emergency fund. Now, if you've done your budget, you know how much your expenses are for the month. A good rule of thumb for emergency budget is 6 months. I'm telling people now to do 12 months. That's hard. And I understand that that's hard. But if you can get to the point where you've put aside 12 months worth of expenses for an emergency, you're in a really good financial place if you were to lose your job. And where we are right now in the economy, I don't know if you guys have noticed it, but a lot of big companies are laying people off. So you might know someone who lost their job recently, and you might know a few people that are going to lose their job over the next couple months going into the new year. If they don't have some type of reserve, it's going to be really, really tight and really, really hard for them to sort of survive, right? And when you're stressed about finances, everything else is more painful. Your relationships are worse. Your friends are getting on your nerves. Your kids are getting on your nerve. Your spouse is getting on your nerves. The lights are on too much. Everything's annoying to you when you're stressed about finances. So giving yourself that emergency fund gives you the breathing room, right? Try, if you can't get to 12 months, go to 6. If you can't get to 6, get to 3 months. If you can't get to 3 months, get to a month. But you got to have some type of emergency fund set aside. And as I mentioned to you before, your emergency fund should not be in the same checking account that you're using to operate all of your expenses on a daily or weekly basis. You need to put it into another account. What type of account should you be saving money in can vary, right? I tell everyone, do not leave your money in that regular savings account at the bank with that 0.04, 0.03% interest rate. It's a joke. They're robbing everyone. Stop leaving your money there. If you need to open a savings account, open one of those online accounts, a money market or a high yield savings account. Those give you much more interest than the regular bank ever will. And at least your money is starting to grow a little bit. And it's a fun game. Once you start putting money in there and you're starting to see the interest start to accumulate and grow, you then start to get some momentum and you start to get some mojo in the sense that you want to start putting more and more in there because you know that's for you, right? So money market accounts are great places and high yield savings accounts are great places. There's a bunch of banks that I'm going to send you guys on a list to check out. Rates right now are about 5%. You're going to see some at 4, 4.5, 5, 5.10, 5.25. That's the interest rate environment we're in right now. That's what the yield you should be getting on your money. If you have it at a regular bank, you're seeing 0.05 maybe, right? They're robbing you of your money to go make more money with it because the banks then lend you back your own money at a much higher interest rate than you give it to them. So stop leaving it there. Make sure your money's working for you. If you have reached a point where you have a fully funded emergency fund, that means you got 1 year worth of expenses, you can start to look at putting your money into another financial product. The one that I tell people that I like to recommend is you can put it into an insurance product. The younger you are, the more affordable this insurance will be. The reason why I tell people to do this is this. If you've got 1 year's worth of savings in an account, you can put it into a place that when your money's in a money market or a high yield savings account, at the end of the year, the bank will send you a 1099 INT. That's an interest form. So yes, you got paid from a job, you paid taxes. You put your money into a bank, they're going to tax your interest. It's crazy. I know it makes no sense. This is our tax system, and this is why we need to educate ourselves around how to move our money and how to properly set things up. So now you made money at work, you saved it, you put it into the bank, they're going to tax you some more on your interest. It's stupid. If you've got enough money, if you saved up an emergency fund for a year and you put it inside of an insurance policy, it's a financial product, a part of that money is going to go for life insurance, which is not a bad thing. You're going to get life insurance. The other rest of the money is going to be inside of the life insurance policy in a cash value account. The cash value account is going to have a very similar interest rate to the money market and high yield savings account. Now, once your money's inside of the life insurance policy, though, you no longer get taxed on the interest you make on your money. Now your money is going to start growing tax-free. Does everybody get that?
Yes.
Does everybody understand how important that is? Please put a 1 in the chat if you understand how important that growing your money tax-free is. Are you guys sleeping on me? Okay, some of y'all are up. All right, great. You got to understand that growing your money without paying taxes is the game that we are all in. That's the money game. Once you figure out how to reduce how much tax you pay, you get to keep more of your money. It will make you rich. Just paying less tax will make you rich. Please understand that. So if you put your money inside of an insurance policy, it will grow tax-free. You can borrow it. That borrowing is tax-free. And when you pass away and you want to pass it on to somebody else, it goes to that person tax-free. We are all in the money game. The money game is taxes. When you figure out that game, you figure out how to get rich. So I'm giving you guys one of the tips. Get your money out of a system that's going to keep taxing you, put it to a place where it can grow, compounded interest, and tax-free. You guys will thank me later. Kai, what's up? What's the question?
I feel like this is more so person to person, but do you have a number that you think people should be putting into their life insurance every month?
That depends on you. It is a person to person question, because when I create, so I, as an insurance broker, I create custom life insurance plans for people, and I literally ask them what's the number that they're comfortable putting into a policy every single year. So your number might be different from my number, might be different from Steve's number, might be different from Mashika's number. Everyone could have a different number, right? So it's really based on where you're at that moment in time when you're getting your policy set up.
Okay, thank you.
Yeah, great question though. Yeah, there's no set number, but like I said, the first thing you want to do is once you get that emergency fund set aside so you can cover your bills for a year, then you start looking at putting the money into to put into insurance for that growth. And it's not going to be it's not an investment, so it's not the stock market, it's not real estate, but a properly structured life insurance policy is like a savings account on steroids. That's how important it is, because once you're out of the tax game, you're starting to make money. It changes how your money grows. Okay. A lot of you know that I do talk about infinite banking. So that is a component of infinite banking, what I just described to you, right? Putting your money into a place where you can access it and it still grows tax-free is a part of the infinite banking system. And I think everyone alive should be doing this. Charles, you got a question?
Yes, sir.
What's up?
If you have a traditional retirement account, 401k, the process should not be taxable if you roll it over into the policy, the insurance.
You're moving the money from the 401k into an insurance policy?
Right.
It is taxable. So here's why. When you have a 401k, so anyone who has a 401k, a 403b, a regular IRA, those are all called qualified accounts. A qualified account means when your job or wherever you're getting the money from, when they put it into that account, they did not tax it before it went in. So it's called a tax deferred plan, which means that you're gonna pay taxes on it when you take it out, whatever point in time in the future that is. An insurance product is not a tax deferred plan. So you're putting money into it that's already been taxed. That way you get to grow tax free on the back end. You follow me on that part, Charles?
So it would be taxed if you wanted to roll it over. That portion would be taxed.
Not all. It depends. It depends on a couple things. One thing it depends on is your age, right? Because if you're past the age of 59 and a half, we start talking about RMD, which is called required minimum distribution. Once you pass a certain age, you can take money out of your 401k and your retirement account without paying tax on it. You're not paying a penalty, right? So if you're at that age, you can start to pull money out and put it into an insurance product. You're not going to be penalized, but getting insurance at an older age is more expensive. So it might not make financial sense to go ahead and put the money in there because you're paying so much for the insurance. It doesn't make any logical sense to do so. Here's another thing I just want to point out to people. If you do have a 401k or a 403b or any of those retirement accounts, keep in mind that when you put the money in there, which is now in the present day, you're assuming that the taxable rate that you're going to be pulling the money out later in the future is going to be less than what it is right now.
That ain't
Based
happening.
based on where we are in our economy, taxes in the future are going to be higher than where they are right now. So you can wait if you want to, but the longer you wait, the more tax you're going to pay later on down the road. Because as you guys can see, the US as a corporation is in trillions of dollars of debt. The only way to pay off debt is to tax people. That's their business. That's how that business works. We spoke about corporations in the beginning. What's the purpose of the corporation? It's to generate money. How does the government generate money? They tax everyone, which is why we pay so much in taxes right now. They're trying to make money for themselves. So be mindful of that. Unless if you're I'm not telling you not to have a 401k. What I'm saying is be aware of what's going on with your money later on down the road. And for some of us, we're on the young side. For some of us, we're in the middle, and some of us are closer to the end. The ones who are close to the end, tax rates are going to be right around where they're at right now because you're about to retire soon. If you're young in your 20s, you've got like 40 years before you get to retirement. The tax rate is going to be much higher in 40 years than it is right now. And that's just the way that it has to go for the government and everything to sustain what we've been doing. If you have a 401k and your job matches, put your money in there up to the match. If you're going over the match, we need to have a conversation as to why you're doing that, because it may not be the best thing for you financially. It might sound like a good idea, but it might not be the best thing for you unless you looked at all of the things, all the options down the road. If your job does not match at all, I would look at some alternatives for your retirement because your 401k is in the stock market. I'm not wishing this on anyone, but knock on wood, if I asked you this in 2007 going into 2008 and you had a really big retirement account that you were planning on retiring on, you lost 40% of your value in the stock market in 2008. You can't retire. Most people could not retire because they lost too much money. They had to keep working, which is why you see a lot of older people now still working jobs, right? Because they can't stop working because they can't afford to stop working. They didn't have enough money set aside or enough cash flow coming in to cover their expenses because with inflation, everything goes up. Milk's more, gas is more, rent is more, everything's more money. So you need to figure out a way to have your money grow, receive cash flow. Cash flow is the name of the game. Don't worry about appreciation. Don't worry about making these big hits and investments. You need cash flow. Figure out how much money you can bring in every single month to offset your bills or wipe out your bills. Because the moment you don't have debt, that's a killer. The moment you don't have debt, life becomes a lot easier. You get to live life on your own terms. Okay? I don't want to harp on that too much, but it's important. That's it about just the basics. So I hope everybody got just the foundation of that. If anyone wants more information on it, I will send this out to you. Let me drop the link for the newsletter. So you just sign up for the newsletter and you'll get added to the email list, and I'm going to send you a bunch of information from the newsletter. Okay, where did my thing go? Oops. All right. So I know some of you guys saw what I posted a week or two ago about bottle service as the destruction of Black wealth. I need everyone who wants to talk about this to unmute themselves because I needed some therapy after hearing this craziness online. Does anybody agree with the statement that bottle
Can you
service?
repeat that again?
So what I posted last week, a week and a half ago, was that there was a video floating around, and the guy said that bottle service is the destruction of Black wealth. That's the reason that Black people are struggling with money is because of bottle service. Do y'all agree with that?
No.
I agree that the reason why they probably would say that is because when you do have vices and you don't discipline that, you can definitely overspend if that's where they're getting at.
Yeah, I don't know if that's where they were going, but to say that bottle service is the problem, I don't think is what the real issue is, right? People are not, it's the behavior. They're not managing their money properly, right? If I got the money, it's not bad. If I don't have the money and I'm spending like I have the money, now we got a problem. So that was the wildest thing I've ever heard online in regards to Black wealth because it makes no sense at all. you don't know what everybody's doing with their money, so don't start making out blanket statements out here. But
I
it's
agree.
But Dre, what if you're in the business of selling bottle service?
it's great for you. That's great
Right.
business. It's a great business. It's a great business because that's the business you're in, just to sell bottles. But that's not a bad thing. But for everybody else, you can't tell me it's a bad thing. Like to shift my focus to the fact that bottle service is the problem is where it was where the video was pissing me off. That's not what the issue is. It's not about the bottle
I know.
service.
I just thought I know.
No, I
I thought it
know.
was funny.
No, I get it. I get it. Like
Listen, I think the issue for everything is a lack of discipline. If you have a problem with something, it's because you lack discipline. That's my issue.
I mean, this is a true statement. It applies to a lot. The issue is FanDuel, says Jamel. FanDuel is also a problem. Everybody trying to hit a parlay. That's gambling is listen, money is about behavior. People don't want to talk about it the right way, but that's what it is. It's
Then the
behavior.
fear of missing out hits.
Yeah, well, I mean, that's a behavior. FOMO is a real thing, right?
Mm-hmm.
I dropped the link in the chat for the newsletter. I'm gonna send out a bunch of information in an email to everyone who signs up who's been on the call today. You're gonna get it. I'm just gonna send it to you guys. So if you click on a link, go to the newsletter, put your information in, it'll put you on a list. I'm gonna send a blast out to the list. Another thing I wanted to talk about was wait, did someone raise their hand? No, I guess not. This thing gets crazy. Another thing I want to talk about is why you guys are hearing so much about IULs online. Like, why are people trying to sell you IULs so much recently? This is a longer conversation, but the short version of it is that IULs can make people a lot of money. You have to always take a minute, take a breath, and see where is the business opportunity in these things that people are selling online, right? They're selling it for a reason, and it's most of them is not out of the goodness of their heart. IULs are a financial product that pay the agents a lot of money. IULs are a financial product that have a lot of strings inside of them, and if not explained properly, will burn you. And you don't get burned this week, next month. You get burned 10, 20, 30, 40 years from now, from when you got them, right? So how many of you have heard of IULs? Drop
I
a
did. I had someone who did try to burn me with one. New York Life.
Yeah, they're not horrible, but you gotta know what you're getting into, right? So they're not for
Right. It was how
everybody.
he sold it though. It wasn't like
Exactly.
you said, 10, 20 years later, that's when technically you should be. He made it seem like it was a completely different product than what he sold it as. Okay.
And most agents are doing that. And I don't want to say that all of them are malicious. I just believe that some of them don't have no idea what the hell they're doing. So they're selling you products that they don't fully understand because their commissions on them are really big. Charles, you got a question?
No, I was just confirming that I've heard about it, and
Oh,
when you
okay.
asked the question, yeah.
Gotcha. Okay. Yeah, so like I said, I don't think they're being malicious, but I think that a lot of these agents are just looking at the commission check and they're pushing them because they're hot right now. The reason why I put this little clip from an article and number three was so there's a lady who had a VUL, right? So IUL is index universal life, and a VUL is a variable universal life. There's a lady who opened a policy about 30 something years ago. She's 72 now. So she was in her 40s when she opened it, right? She was told when she was sold it that the VUL would have a bunch of money in there and she could use it for retirement because she put in X number of dollars for X number of years. It'll be a great supplement to her pension and 401k. When she turned 72, she got a letter from the insurance company telling her that the policy is being terminated. But despite her paying her premiums for the last 40 years, everything that she was supposed to do, she did. The policy had $70 in it as of February when they did this article. Do you think she was pissed off about what she ended up with versus what she thought she was getting?
Hell yeah.
Absolutely. Absolutely. So the reason
I
why I
mean,
brought this
that should be illegal, honestly.
That's a great question, right? Let's talk about that a little bit, right? That should be
Yeah, like what? What's going on?
so that's this is how it works, right? When you sign up for a life insurance policy, this is why you really want to use a very reputable agent that you know and trust and that understands the product. When you sign up for an insurance policy, you're signing a contract. You, as the client, and the insurance company are making an agreement that they're going to do certain things based on the policy that you're signing up for. If you don't understand all of the mechanisms inside of the policy, what they did wasn't illegal because everything that they did to the policy was in writing in the policy. 99% of people do not read their documents. They just don't read them. It's a lot of paper, it's a lot of words, it can be confusing, it's a lot going on in there. So because you used ignorance to move forward, 40 years later, you're gonna pay for it. Well, this woman paid for it. And the reason why I wanted to show this to you guys is because IULs have been around since 1997, right? They're not old. VULs have been around longer than them. Those three-letter words are very, very similar. They are both ULs, universal life policies. This is the reason why I tell people to be very careful about IULs. Because they haven't been around long enough, the people that are going to get burnt with them, they haven't got to that part yet. They haven't got to the end to know that this is not what I got or this is what I was supposed to get. We haven't got to that cycle yet. But VULs, I was a person that got a VUL because my parents got sold one when I was like 18. So I have a VUL, right? The policies are trash, straight garbage. So I created a checklist, one of the many checklists I made that I send to people who are interested in getting a VUL. If you're on the newsletter, I'll send you the checklist also. I'm going to send it out a blast tomorrow from the call. It's about 10 questions that you can ask an IUL, an insurance agent that's trying to sell you an IUL. There's questions on there and there's answers on the checklist. So you will know based on what they tell you if they're telling you a bunch of crap or not, and they need to explain it if it doesn't make sense to you. But I'm giving you the framework of these are the questions to ask. These are the answers to those questions. So if their answers don't even sound remotely close to this, that should be a red flag. You might want to dig a little bit more and get some more answers, or stop talking to that agent about that product because they may not know what they're doing. I don't want to see anybody get burnt with these products anymore. And it's hard to tell people this because we haven't gone through a full cycle yet. You need about 40 or 50 years to really see what these products do, and they haven't been around long enough. So all these IULs, VULs, everything with these three-letter words on them, I'm not a fan of them right now because they're not being sold properly, they're not being set up properly, and a lot of them are going into our community, and they're going to destroy the wealth that we do have at that point in time. My personal opinion, but I just want to share that with you guys. Any questions for me right now? Nothing? No, nobody? Okay. Oh, Kai, what's up?
So I'm very glad that you brought up the IUL because I think that I just signed up for one.
Okay.
And so like you got my heart racing.
That was not my intention. I apologize. That was not my intention. I'm gonna listen, I'm gonna send you a link. I'm gonna put it in the chat. Book the free consultation, and
Okay.
we're gonna go through your policy. How long ago did you get it?
I only applied for it like 2 days ago. So I'm not like
You didn't get approved yet.
no money pulled, nothing, but still the fact that I did it and it was like I didn't even know this. So
Yeah. Yeah. That's the reason why I started doing. That was one of the reasons why I wanted to start doing a series, right? Because um we need to protect ourselves, right? Everybody needs to know what they're getting into. So you can go to, I'm going to send you the regular link here. Click on the link for the website, and there's a booking tab. Click on booking, and then there's a 15-minute free call. Click on that, schedule a time that works for you, and we'll jump on it and we'll go over what you signed up for. They did give you an illustration, right?
yes, I have it.
Okay, so I'm gonna go through your illustration and show you if it is an IUL. I'm gonna show you the things you need to look out for in them, and you'll also get that checklist that I'm gonna send out to everybody. You'll have it before that, so we can go over that together as well.
All right, thank you.
No problem. All right. So some of the things that I'm going to be covering over the next couple weeks and months are right here. It's not everything, just some of the stuff, right? So we're going to talk about real estate investing. We're going to talk about wholesaling. Dwayne, I know you're on that track already. We're going to talk about what type of insurance you should have. Everyone should have life insurance, term, whole. I don't care. You should have some type of life insurance. We're going to talk about are you ready to buy a house? For those of us who are looking to buy homes, we're going to talk about opening LLCs, S corp versus C corp. You're going to talk about if you should buy an LLC or versus opening your own. That has to do with the history. We're going to talk about how we should be saving money for the kids for the future. That's going to involve, 529. Does that work? We're going to talk about other places we could put money for the kids later on. We're going to talk about building passive income. Cash flow is your friend. That is the most important part of the money. You have to have cash flow. We're going to talk about 401ks. How much money should you be putting into your 401k? How much of your income percentage wise? What your jobs hopefully offering you if you are doing 401ks? What are the downsides of 401ks? We're going to cover that topic. We're going to talk about are our parents ready and able to retire, right? So I don't know if most of you know this, but our generation, the millennial crew, is probably the first generation that's ever going to have to deal with this. We're going to have, for those of us who still have our parents or our guardians, we're going to have them going into retirement as we're pretty much reaching our financial maturity, and kids going into college right around the same time. Because depending on your kid's age and your parents' age, they're going to be transitioning out of work while you're trying to figure out what you're going to do for retirement while getting your kids in or out of college. It's a crazy, chaotic time, and we need to be aware how this transition happens. Because if we're talking about parents who are on a fixed income, can they afford where they live? Do they have to move in with you? Do they have to move in with someone else? Are they going to assisted living? Are they going to a retirement home? Those things are very, very expensive. So we're going to have a conversation about that. I put on here, we're going to talk about PMI. PMI is private mortgage insurance. That's about buying real estate, buying a home. We're going to touch on a couple of different lending things as well. We're going to cover so many different topics. It's too many to list right now, but I promise you, I'm going to do the best that I can to give you as much information as possible. I do have about 30 checklists that I've created, and I'll be sending out on a bi-weekly basis. So if you're signed up for the newsletter, you'll be getting those checklists. That's the purpose of the newsletter, is for me to send out information that I think is helpful and useful, that you can learn something from, that you can teach to someone else, and that you can hopefully prosper with. The next family meeting is on November 5th at 7 p.m. I hope to see you guys there. The topic has not been secured yet. So if you guys tell me what you want to talk about, that's what I'll be talking about. Let me know whatever the topic you want to cover, and I'll start to create some documents around that. Because like I said, I have a lot to cover. It's not in any particular order. So whatever you guys are open to, I'm open to feedback. Drop it in the chat, send me a DM, send me an email, whatever you want to do. Let me know what you guys want to learn about, and I'll be covering those topics for you guys. Charles, you got a question?
Yeah, no, just a statement that I didn't get that video presentation that you and I talked about earlier.
Oh yeah, my sister's gonna send it out. So if you didn't get it yet, you'll probably get it first thing in the morning.
Okay.
Yeah, no problem. No problem. Yeah, you'll get that soon. Oops. That is the end of today's family meeting. Did you guys learn anything today? Was any of it helpful?
Extremely informative. Thanks for that.
I appreciate that. Thank you, Preston.
I concur. I definitely did learn a lot. And I look forward to joining the next session.
Oh, wonderful. Thank you. Thank you. Thank you.
And so the newsletter that used to, cause I just signed up for it not a few minutes ago. That comes what you said every week, every month.
Bi-weekly, every other week. I'm gonna send out the newsletter. So it's normally the day after I do the call, I send out the newsletter. So every time I have a family meeting, the next day you're gonna get one, except for this week because I have to send it out in a couple of days. It's not done yet, but it will be going out every other week. It's normally the day after we have the family meeting call.
Very cool. Thank you.
No problem. No problem. Oops. If anyone needs to follow me on socials, this is my social media. It's Andre _talks green on everything. So if you don't follow me already, you can go there and follow me. YouTube, this Zoom will get actually put up on a YouTube, so it'll be there for everybody to watch. TikTok, LinkedIn, if you want to link with me there. I'm here for it all. I love questions and I love helping. Anybody have anything they want to share right now, or we're good to go?
It's not really nothing to share. I think